Welcome back. This is part 2 of replacing a life insurance policy using Cifico animations to present to your client. If you haven't seen that video, go back, you'll get greater context. But as a synopsis, we basically spent a lot of time going over the problem. The life insurance policy that the client had wasn't going to work out, so we built an animation that showed the guaranteed, mid, and current projections of that same policy, and they all sort of fall apart at age 70 to age 90 or so. So now we want to show the solution, right? We've been set up to show this great solution. So you can't see here, but I have tabs. When you're creating new animations, you can switch back and forth between them really quickly by clicking the tabs. So what we've done here is we've taken the current policy at its current projection, which is not guaranteed. I'm going to go back real quick. We took this life insurance policy and placed it on this animation. It's right here. It's a little smaller. And we've put it alongside the proposed life insurance policy. So all I did was take the life insurance files and put them on our client manager, and all the data is here. So this is what they currently have, and it's not guaranteed. This is the death benefit. The first number is always the death benefit. That dictates the circumference of the circle. Second number is always the cash value, and that dictates the blue growing inside of the circle. The horizontal line on the bottom is the client's timeline or age. You're going to see that change as we have them grow older in the animation. So first thing I want to note is this is your current policy in its best projection, its best form, and it still failed around age 91. However, we're looking to replace this policy with this policy, and we're going to take the cash value, the 478, via 1035 exchange, which just means we can exchange, we can put this money into another policy without causing a taxable event. And when we take the 478 and put it into this policy, it immediately buys twice the amount of death benefit, but your cash is decreased to $211,000. Maybe that's a concern, maybe not. Let's get through the animation. We can touch on that a little later on. I'm going to play these slow to start, as always. Again, Mr. and Mrs. Client, we're not suggesting that you're paying over $10,000 in premiums. It's just your current policy compared to the one I'm proposing to replace it with. And you can ignore the $11,000 here on the bottom. It's trying to add up the premiums. Some animations that's relevant, and this one it is not. I'm going to pause right here. Just pausing. Soon we're going to speed view this and go much quicker. Again, these growth indicators show DB death benefit, CV cash value. The death benefit's going up by $23,000 that year. The cash value is going up by $22,000 and change. And on this policy, the solution that I want you to replace this policy with, the death benefit will never change. And look, the cash value is going down yet again, even more so than how we started off from 478 to 211,000. But this is guaranteed, right? So let's press play. I'm going to speed view this for a while. You can change the playback speed or the playback options to whatever, contours best to the conversation you're having with your client. But I'm just looking at images right now and really the colors of those growth markers. Here we are at age 61. I see greens over the top here. So it looks like the current policy you have is doing really good, right? They might kind of be like, well, why are we even replacing this? And this policy down below doesn't even have any more cash value left, and it's just staying the same. And so as we move further on into this, we can see how maybe this policy looks like it has a fighting chance. But instead of playing this in a speed view, I'm going to pause this and stop motion it. Stop motion means pause, and now just click the one advance or back years button. So watch this number here, age 73. So as we talk to the client, we could see, over time, look, that current policy doing real well, still growing. We're at age 80 years old. Would it be nice to have $1.9 million in cash at 80? Well, if you took that out, it would, detract from the death benefit. So maybe you want the death benefit, maybe you don't. We're going to get into that in just a moment. So as we go more, we're going to keep stop motioning. But then if you're really interested in death benefit, right around age 86, look at that, starting to drop down. That current policy is running out, the cash value going down. And then here at age 95, you're left with nothing. And I'm going to zoom out here just for a moment. And I'm going to bring this back 1 year. I'll pull up the stats card real quick. If this person passed away right now at age 94, for every dollar that they put into this policy, the one that they currently have that we think is a problem, their heirs would get $2.26 back. But with the policy that we proposed, we're going for longevity. We think the client's going to live a long time. If they died at age 94, for every dollar they put in, their heirs would get $8.64 back. So you can use this stats card to check in from time to time. I'm going to put it aside for the time being. I'm going to slow this down, and I'll just kind of have this playing. And now I'm going to further zoom out, just saying, after you're done noticing that this policy is expired and this was the right policy to keep if you want death benefit. This is just going to go on all the way out to age 120. I'm going to reset this animation real quick, zoom back in. It might have been really nice. The client had probably noticed, this top policy getting flush with cash. So if that's kind of dissuading them from even wanting a death benefit at any point in time, then we can just kind of use our little annotations here real quick. And we could say something like, well, maybe you don't want this policy anymore, and maybe you don't want to replace it with another life insurance policy. Maybe what you want to do is you want to directly take the $478,000 in cash value, 1035 exchange it to an annuity, and see how that affects the growth of that asset, as well as maybe retirement distributions later on. Lots of different places you can get into conversations with the animations itself. Maybe that'll be a part 3 to this, but more than likely I'll move on to an entirely different topic. If you've noticed, I've done this entire video in one take. It's not because I'm some great speaker, but the animations lend themselves to cohesive storytelling. You can do the same for you and for your reps. And think about this, if a client sees something like this, they're more likely to refer it to other people, because their conversation with someone they're going to refer you to might go like, you got to sit with my person, they're really great. They're not showing me the typical spreadsheets and flowcharts. Kind of get this schematic that moves, that animates. I really want you to have the same experience. So when they call, take a meeting with them. Anyhow, if you have any questions, you can reach out to me on LinkedIn anytime. Until then, good luck at your next meeting.